Okay. Okay. So good evening, everyone. Good evening, everyone. Super excited to be on the call this evening, everyone. Good evening, everyone. Super. Oh yeah. So, well, today's promises to be very exciting. I'm really excited to be on the call with us this evening. This is gonna be amazing. We had a very fantastic time yesterday. I want to really appreciate God for His grace. And this evening, I'm ready. Just hoping you guys are ready. So, um, we're just gonna wait for another few minutes to have more people join us on the call. So, here's what you want to do for me. Why don't you let me know who is on the call to this evening? So, put in your name and where you're joining from on the call. If today is your first day, also let me know if today is your first day or if you were with us yesterday. Okay. We basically are going to also just do a review of the the lessons we covered yesterday. So yeah, so please put your name in the chat box. If you put your name in the chat box and where you're joining us from this evening, put that in the chat box. Let's see your name, where you're joining us from in the chat box. Let's go, guys. Let's go. I'm gonna start by giving us some some emojis right there in the fire emojis for everyone. Today's gonna be fire. Boom, everyone. That's for everyone's fire emoji. So let's go. Tell us where you're coming from. Where you're joining from. Let us know. Let us know. It should be good to have know who I know is on the court today. Okay. So some 5 more minutes to have more people join us on the call before I get into what we're doing today. Yeah. On the call again. Oh yeah. I don't sleep to sing. Okay, still waiting for a few people to join. So a few people to join the call. So if you're on the call, let me know. Let me have your name on the call. Yeah, Kerry, good evening. Good to have you on the call. Good evening to you, Kerry. So who else is on the call? Come on, put your name there. Put your name there. Put your name there. If you're on the call, put your name there. Put your name there. If you're ready for today's class, put your name there. Put your name there. Say something. Hello, hi, good afternoon, good evening. I mean, let us know where you're joining from. So, exactly 6:10, I'll start my teaching. Yeah, Kerry, that's it. Kerry putting his name there. Yeah, hi, Kerry, Karin Odungo. Interesting. Kerry, is this name Nigerian? Hey, our participant from Malabo is right there. Good evening, Pastor Shola. Hi, Okoyemi Ajana, I believe so. Ajala. Okay, Odungo is worry. Oh, really? It sounded Zambian, you know. Uh, that name was sounding Zambian. Okay. Good evening, guys. Okoyemi, good evening. Good to have you on the call. I hope you guys have, interesting time during your take home. I know that if few of you already submitted full blown Niger blood, so if few of you have already submitted, I could see it really interesting. Have you learned through that process, understanding leverage? I'm going to touch on them just before we get into the focus of today's class. Hopefully, we have more people joining us today. I'm just gonna ask for a moment as well. A moment. A moment. Okay, so let's get started, guys. Yeah, Carrie, I made a mistake using naira instead of dollars while registering my HF. Hope no issue. Okay, yeah, Carrie, no issue about that. Really, um, the implication of that is that uh your trading will be denominated in naira. Okay, if you are fine with that, you don't have to bother. But if you think it's a big deal for you, maybe you really want to be seeing your money in dollars, not in naira, then you may want to the option you can write to the customer care of HF, and then they should be able to help you change it. Alternatively, if you have an alternate email, you can just re-register. Just go through the process again, re-register, and Okay, so sorry about that. I think I got thrown off mistakenly. Mm, okay, so so that's the way it is. So if you are not fine with, if you need it in dollars, just follow my recommendation. Okay, if you need it in dollars, either write to HF. Okay, either write to HF or use an alternate. If you have another email, use it to re-register, and then you will be fine. So that's the solution. Okay, guys. So we I think we should just get started. We should just get started. So yeah, yesterday I gave us take home, and I asked us to identify to define some terms. We I remember I mentioned what do you call it? I mentioned leverage. Yeah, leverage was one of it. Leverage was one of it. I mentioned lot size. I mentioned what else did I mention? Entry price, stop loss, all of those things. So I did mention all of those. So um, a few people, yeah, a few people actually took that serious and they returned their own work, and I'm really impressed by what you discovered. So I'm just going to do a little bit of detailing on that. Okay, that's what I'm going to be doing today. I'll be detailing on that. So leverage is very important, guys. Leverage is very, very important. And what do you call leverage? Leverage is a tech. I call it a technical borrowing. A kind, you know, that you get from your broker, which allows you to trade, to take trades that are more than your account size or capital. 1 minute. Hey guys. Okay, so guys, sorry, sorry for that interruption. Oh, it's okay, it's okay, it's okay. These guys just came in and they will not allow me rest now. Oh yeah, say I and go. Say I, I. Okay, now you can go. Yeah. No way. We are not doing this call today. You, oh, is it okay? You guys will have to give me a few minutes to resolve this interruption. Okay, okay, chill, chill. You want to be on the call with me, right? Shh. Don't get the tablet. Okay. Okay, guys. Just a few minutes. Wait, where's your mom? Go and call. She's in the car. Go and call her. Okay, um, so yeah, leverage. So leverage is that borrow, that's lending given to you by your broker that allows you to take trades that um trade sizes that is more, or that are more than your account balance. So what that does is that, you see, You have, let's say, $100 in your account. You have, let's say, $100 in your account, but because you have leverage, hey, boy, now you have to go. Now, but because you have leverage, okay, you are able to take the same trade that somebody who has $1,000 is taking. So, ideally, when you go to the market, if you have $100, you should not be able to buy the same volume of trade that a someone who has $1,000 will take. Okay, so with leverage, leverage allows you to do that. Okay, leverage allows you to do that. Leverage allows you to take the same trade that somebody who has $1,000 takes, and that's made possible. That's made possible by the uh, leverage that your broker actually gives to you. Okay, so and then we talked about lot size. Lot size basically is just it shows you the number, the volume or amount of units of a trade that you can take, okay, or that you have chosen to take based on your capital or leverage. So the thing, some of the things that determines your lot size is going to be, of course, your three things: your amount, the amount you have in your account, in your balance, that's your capital. Number two, the leverage that you enjoy from your broker. Number three, your risk, how much you're risking. So those are the three things that mostly determines your lot size. So that determines the amount or the volume of trades, of units of trades that you can take when you are trading. So if you have $100, because you $100, let's say, let me give you this example. So in a standard unit of trading is 100,000 units. In every lot of forex trading has 100,000 units. Okay, and I will start doing that right now. So so a standard lot has 100,000 units. 100,000 units. Okay, so they call it standard lot, 100,000 units. So now, so when you're doing any transaction, whether you have $100,000, $200,000, $300,000, $10,000, $1,000, $100, or even $50. So the amount you have will determine the total unit you can buy of a standard lot. So lot is the size. So this is a full lot, or what we call a standard lot. Okay, standard lot size or a full lot size. Now, the amount of money you have in your balance will determine the number of units you have. So imagine if you have 100,000 units. If you have 100,000 units, you will be able to buy, if if you have $100,000, that means you will be able to buy 100,000 units. That's what it means. If you have $100,000, you'll be able to buy you have 100,000 units. But if you have $10,000, you only be able to buy 10,000 units. If you have $1,000, you'll be able to buy 1,000 units. If you have $100, you'll be able to buy 100 units. If you have $50, you'll be able to buy 50 units. I mean, in basic arithmetic, that's what it means. So your balance will determine how many units you can buy. But with leverage, the dynamics changes, because now with leverage, what I have in my balance, okay, my balance, what I have there is just $100, but because I have leverage from my broker, which is like a technical borrowing, and my leverage is 1 to, let me do that again. My leverage is, where my leverage is 1,000, 1 to 1,000. If that's my leverage, 1 to 1,000. What this means is that for every $1 that I have, okay, so this is my leverage. For every $1 that I have, I can take a trade. I have $1,000 leverage. For every $1 that I have $1,000 leverage. So what it means is that if I have $100 and I have selected the leverage of 1 to 1,000, technically it it means I'll be able to take a trade, even though $100 is what I have in my balance. Because of leverage, I can take a trade of somebody who has $100,000. That's crazy. That's what leverage does for you. That is the honest truth. That's what leverage does for you, because you have been given a leverage of 1 to 1,000. For every $1 you have, you get $1,000. Okay, so $1,000 times 100 is $100,000. So this $100,000 is not there in your account. It's just opening an allowance that you have in the market to go and. So if somebody who has $100,000 actually in his balance goes and buy 100,000 units of a currency pair, because you have selected a leverage of 1 to 1,000, you can go and take this and trade the same volume, the same numbers of units. And now this is where it gets interesting. So if both of you buy and the price of the currency you've bought goes up, we talked about pip yesterday. If it goes up by 1 pip, 2 pip, okay, your profit, the two of you will earn the same profit. So he's making $10,000. You should make $10,000. That's what is interesting there. But let's look at the flip side. Let's say both of you buys, and instead of the price to be going up, it starts to go down. Your own account, under 2-3 seconds, your $100 is blown. You've lost it. But because he has $100,000 in his own account, he is still in that trade. So what it means is that leverage is a two-edged sword. It has the good face and it has the bad face. So while leverage can help you to make a lot of money fast, it can also help you to lose your money fast. So that's why when it comes to leverage, you have to be very, very careful. In fact, in the US, there are regulations around leverage that can be offered by a broker. Okay, there are regulations around, I think the maximum is probably 1 to 10 or 1 to 50 thereabout. So it's important to understand leverage. So let's look at other part of that. So yeah, I was talking about lot size. So I think that's what brought us into leverage. So the lot size, then I told you the 3 things that determine your lot size: your balance, how much you have in your account; number 2, the leverage you have; number 3, the risk you are taking, the risk you are willing to take. So those 3 things will determine the volume, the amount of unit of a trade that you can take. Entry price is very simple. It's just the price at which you decide to buy or to sell a trade. That's what an entry price is. That's what an entry price is. Okay. Then I think we talked about stop loss yesterday. Stop loss. Oh, we talked about pending. Yeah, pending orders. Pending orders. So pending orders, I'm just doing a quick review of some of those terms. A pending order is an instruction you give to your broker to execute your trade at a scheduled price, at a stipulated price. So you tell your broker, buy this Euro USD for me. Okay. You tell your broker, buy Euro USD for me when the price is okay, let's go to Euro USD. Okay, so this Euro USD. So now let's look at where the current price of Euro USD is. So yeah, so the current price of Euro USD as I'm talking to you right now is somewhere around there. So this is where it is. Okay, so that's where the price is right now, somewhere around there. Now, so imagine that like I told you yesterday, I have this, after I analyze the market, I have this feeling that this price is still going to come down to this place. Okay, it's presently around 1.052, but I have a feeling that it's still going to come to 1.045. I can do a buy pending order. I will just put an instruction here at 1.045 and tell my broker that when price gets to 1.045, buy Euro USD for me. Buy it. Okay, that is a pending order. Now, this type of pending order is called a buy limit. Buy limit. There are two types of pending order: the limit order and the stop order. I'm going to explain the two of them to you. Okay, so we call this one, like I said, buy limit. So this is a limit order. This type is called a limit order, buy limit. Now, the second scenario is this, another pending order. Let's assume that I just feel like, okay, you know what? If price is presently around 1.052, but I have a feeling that price will eventually come to 1.072 and it will continue to go up. I can also put a pending order at 1.072 and say, mark, and instruct my broker that, broker, once you get to 1.072, please start going up. 1.072. Let me put that in. Okay. So I can tell these guys that once you get to 1.072, start going up. Just start going up. Okay. So I will not put a pending order here, and I'm going to call it buy stop. So those are the two. Stop. So it's a buy stop. Sorry, let me edit that quickly. Okay, so this is a buy stop here. Okay, so I have a buy stop here. Buy stop, buy limit. So that's the difference. So it's the same buy order. Okay, so I'm buying it, and when I buy, the moment I buy, this is what I want to see in the market. I want the price to begin to go up. If I buy here, for me to make profit, I want the price to begin to go up. Okay, that's the essence of buying. I want the price to begin to go up once I buy. Now, if it's a buy limit, so if market comes here and my broker obeys my pending order and it buys at 1.045, for me to be in profit, I need the price to continue to go up from there. Okay. If the price goes up, boom, then I am in profit. But if the price disobeys, so this is what I want to see. I want to see the price going up. Okay. So that's the first instance. Now, the same thing for a stop order, a buy stop. So when price eventually comes up to this place, so price comes up and eventually comes to this place at 1.072. Again, once price gets to this place, my order instruction to the broker will also be activated. My price, my trade will start running in a buy. And once it buys, I also want the price to continue to go up. So as long as price continues to go up after price reaches here, it is my pending order has been executed, has been activated. So we have a buy limit, we have a buy stop. Buy limit, buy stop. So both of them are pending order, but it's just the way they work that are different. So in a buy limit, you have something more like this, okay? You have something more like this. This is the scenario. It's like you're on a journey. So for a buy limit, for explanation for buy order and sell orders. So let's clear this and let me explain the reverse. The reverse is a sell, so we can have a sell limit also and a sell stop. So in this scenario, this is it. Let's say price is presently now, if you look at my chart, you will see these candles. We call them candles, the blue and the orange or yellow, the blue and the orange. So the blue one is the candlestick, the chart that shows me that price is going up. So anywhere you see the blue, you discover that it's showing that a movement towards the upside. Okay. When you see the blue, that you see a lot blue are in a rally, that is the blue trades the blue candles are showing a lot of time, you see that price, the market is going up. But anytime you see the orange candle and they are coming in succession, you see that the market is going down. So blue shows that market is going up, black and orange shows that market is going down. Now note, this chart, this is not the same on every chart. On some charts, the color may be different. So all you just need to pay attention to is look at when a particular color of candles follow each other in a series, what direction is the market going? It will show you whether that candle is a buy or a sell. So if you see that the series of the candle is going up, okay, if you see that it's going up, then it is a buy. But if you see that it is going down, then it is a sell. Okay. Okay, that's very important. Excuse me. Okay, so that explains what you see on your chart, whether price is going up or price is going down. So I was just explaining pending orders to us practically. Don't forget, I told us I would like to make it as practical and as simple as possible. So what is a sell pending order? Okay, I just explained a sell, a buy pending order, and I explained the two types. So let's look at the two types of sell pending orders as well. Okay, so I have these two lines here and I have another one here. So now look at this scenario. Look at the current, where the market price is now. Current market price, CMP, current market price. Price is still at around 1.05. Okay. In case you are wondering where is how you're seeing this 1.05, look at it here. Look at it here. Can you see where you have that blue line? So that's where you have it. That is where you have it. That's where, around the place where the current market price is. So now currently, if a euro is trading for 1.05, is selling for 1.05. So whether you want to buy or sell, the current market price of euro is 1.0 price. I mean 5. That's somewhere, marginally, that's where it is. Now, if you look at this, probably the bid price, or I mean the ask price or the bid price, right? So now we can see where the price is currently is, right? 1.05. So let's say I have a feeling, or my analysis, based on my analysis, I realize that market will still go back up. Okay. So I will do what you call a sell limit order. I'll do a sell limit order here. Sell limit. Okay. Sell limit. I'm going to do that here. Good. So yeah, sell limit. So by this sell limit, the implication is that when I see put a sell limit order here, which is an instruction to my broker, I'll place it on my brokerage account. I mean on my account, and I will be telling the broker, please, when price comes to 1.07, help me to start selling Euro USD. Take sell orders for me. So this is what we have to happen. The price will have to come back up here, and then once it comes back up, for me to be in profit, to make profit, it has to be selling. Price have to start coming back down. That is what you want to see for a sell limit. So in the sell limit, price is already going down. You look at a level above where the current market price is, and you say, okay, I want to sell from this point. Now, because I know the market is going to go back up to sell, I am going to put my price above where the current market price is. In this scenario, 1.072. So when price comes to 1.072, it activates my order, and I expect it to start going down for profit. Okay, that explains sell limit. Let's quickly look at the other one. Is my okay? Let's look at sell stop. I told us we have two types. Okay, so this is a sell stop. This is a sell stop. Okay, boom. This is a sell stop. So in the scenario of a sell stop, what you want to see is this: price is already coming down from here, right? So you are looking at the chart, and or your analysis tells you that once price gets to 1.04, it will continue to go down. It will continue to sell. So what happens? You do a sell stop, and you instruct your broker and tell your broker, please, once you get to 1.04 and prices continues to go down, I want to join. So I want to start selling at 1.04. Okay, so you see what happens. Price is above your entry or your sell stop entry level. Okay, so when price gets to that 1.04, it triggers, and you expect it to continue to go down for you to make profit. So these are the scenarios of the pending orders. Okay, now those prices I am talking about, 1.02, 1.07 for a sell limit, 1.04 for a sell stop, these are your entry prices. When price gets there, it activates them. And what that means is that is your entry price, because you have told your broker, I want to enter a sell when the market price gets to 1.04. So 1.04 becomes your entry level for in this scenario. And for a sell limit, 1.072 becomes your sell entry price, rather. It becomes your entry price when the market gets there. So entry price is the price at which you buy or you sell. The price at which you buy or you sell. That's entry price. Okay. Now let me use this opportunity to also explain to us take profit and stop loss. Take profit and stop loss. Okay. Now you already understand the entry price, right? I want to believe you already understand the entry price. So let's say in the case of a sell limit, okay, in the case of this sell limit, you've told your broker, okay, you tell your broker, Mr. Broker, please, when price comes back to 1.072, that's when I want to start selling my selling price, my entry price, right? You because the forex market is basically speculation based on technical analysis or fundamental analysis that has been carried out. There's nothing like guaranteed. Let's look at it. Two things can happen. Now, price can start going back up here, and then it activates your sell order, and then you expect price to begin to come down. And once it's coming down like this, you're in profit. Any level below your sell entry price is profit for you. However, something like this can also happen. Market can begin go back up and go above your entry price. Now, the moment market is above your entry price, your trade will be in a loss for a sell. For a sell, when you're selling, whenever it is above your entry price, it's going to be in a loss. We call it floating loss. But whenever it is below your entry price, when you're selling, mark is going to be in loss, your loss zone. Why? Because once market get to that level, when market is above your, okay, when market is above your entry price, it will start selling. Okay, don't forget, when market is above your sell limit, your entry price when you are selling. So this is our entry price, okay? EP, that's our entry price there. So this is our EP here. So when market is above this entry price, it will be in a loss. But when the market price is below it, okay, it's going to be in profit. It's going to be in profit when market is above it. So here is your profit zone. Anywhere below it is going to be your profit zone. So look at that. Anywhere below it is going to be your profit zone. So that explains it. Now the concept of stop loss. Now, the reason you have a stop loss is to protect your money. Please write this down. Rule number one. Rule number one. Never ever trade without a stop loss. So this guy here is your stop loss. Your stop loss is pretty much your protector. Is your capital protector. Someone who is protecting your capital. That's who your stop loss is. So what he's saying is that, see, if market is above my entry price and I'm in a loss, because we know the market can continue to go up and up, but once it gets to 1.084, please close that trade for me. I don't want to take more than that loss. I don't want to take more than this loss. So close the market for me. That's what the stop loss is all about. Close this trade for me. So it means, I always tell people, when people understand forex trading, you don't have to lose all your money. And I'll explain that. I will show you some other information that attests to this. Oh my God. Let me 1 minute. Okay. So these are this. So once it is above your entry price, that is it. So your stop loss is to prevent your account to be totally blown, or as we call it, for you to lose all your money. Okay. So in determining your stop loss, one of the things you determine before you take any trade is determine how much you are willing to lose. That, okay, if I take this trade, how much do I want to risk? That's the word. How much do I want to risk? I only want to risk 1%, 2%, 3% of my money. So if I have $500 in my account and I say I want to risk let me use $1,000 or 100, I have $100 in my account, and I say I want to risk 1%. 1% is just $1 of $100. So the 1% will determine where I'm going to put my stop loss. So do you understand? So my stop loss when I'm trading must represent 1% of my account. Where I put my stop loss represent 1% of my account. Okay, so if I have 1% of my account and I lose that trade, I still have $99 left. That means that I have opportunity to take more trades. That's the work of stop loss. Now, let me talk to you about take profit. Now, on the other hand, let's say, so we take this trade and market starts to sell at our entry price here. And when price gets back here, boom, 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 it gets here, and then it begins to drop. It begins to drop. It begins to drop. Now I am in profit. So anywhere below my entry price here is a profit for a sell. Now, this here is my take profit. Take profit, you are telling your broker, please guys, whether you are there or you are not there, okay? Whether you are there or you are not there, once market gets to 105, is going to close the trade for you in profit. It's going to close the trade for you in profit automatically. So your stop loss helps you to minimize your loss, and it closes your trade in a calculated loss, while your take profit helps you to take profit out of the market. Take profit helps you to take profit out of the market. Stop loss helps you to minimize your loss, your calculated loss. I call it calculated loss because you know what you can lose even before you take that trade. Okay, let me go back to the chart and let's talk. So do we have questions? Stop loss, take profit, all of that. Questions, guys. Do you understand all those concepts? Stop loss, take profit, sell limit, sell stop. So it's the same thing for, let me quickly explain the scenario of a buy to you rather. So I did say, let's say it's a buy. If it's a limit order buy, Okay, so if this is a buy limit, okay, so if this a buy, okay, so that means that I want the price to come down here, and once it gets down, begin to go up. So that's what I want to see. Price come down, once you get to this level, begin to go up. Now, for a buy, anywhere above my, now don't forget this is your entry price, okay? This is your EP, entry price. Here at 1.05. So 1.05 is our entry price. That's the price at which we begin to buy. Now, anywhere above that level is our profit region. So pretty much these are take profit region. Our profit region rather. Profit zones, okay? So these are profit zone here. Okay. Now anywhere below it is our loss zone. Anywhere below it. That's okay. So you can see anywhere above it, profit, anywhere below it, loss. Okay. So when you're buying and price begins to go down after your trade has been activated, it's going to be in a loss. But if it begins to go up, it's going to be in profit. So again, the concept of take profit and stop loss. So you have to look for, identify a particular price where you are going to give instruction to your broker that, see, if price, instead of buying and going up, it continues to buy and go down, please limit my loss to this level. So this here is your stop loss. We call it SL. Let's just call it SL, stop loss. So why this guy here is your take profit. Let's call the guy TP. Okay. So this is the case of a buy limit. So even if it's a buy stop, it's the same scenario. So if it's a buy stop, let's say your buy stop is somewhere here. If your buy stop is somewhere there, okay, so that means for your buy stop, your entry price is going to be, here. Okay, now if price gets to that level and it activates it and begins to go up, it's going to be in your profit zone. But if price did not get there, and instead of going up, it begins to come down, and then in that scenario, guess what happens? Price begins to go up, gets here, instead of going up, let's say it begins to come down, then you're going to be in a loss. So here, anywhere below this, your entry price is going to be your loss zone. So your stop loss will always be under your buy price, while your take profit will be above your buy price. I'll say that again. Your stop loss will always be below your buy price, somewhere below it. Okay, while the take profit will be somewhere above it. So if it's a sell, your stop loss will be somewhere above your entry price, while your take profit will be somewhere below it. So it's important we understand those concepts. Okay. Now, before I go further, the buy limit and stop, very well. Okay, that's fine. You can I don't really understand the buy limit and stop, buy stop, buy limit and buy stop. Okay, that's fine. Don't worry. You just need to get the recordings and check it and watch it over again. It's very, I'm sure by the time you watch it a second time, you will understand it. Okay. Now, can I change my leverage at any time? Your leverage cannot be changed once you have opened a trading account. So you have to select it before you open a trading account. So if you want to change your leverage, you have to open another trading account. Now you have opportunity to open multiple trading accounts. So you open the trading account and then you select the leverage you want, and then you can move your fund to that new account that you have opened. Okay. I think that's what you can do. Okay. So can I know how many of us already opened the demo account here? You already opened the demo account. Okay. Let me know if you already opened the demo account. Demo account. What's the demo account? The demo account is an account, it's a practice account, something you demo trade, you try it out before you commit your original money, before you can put in your original money. That's what the demo account is all about. Okay. Let me show you. Let's go to Chrome. Um, okay. Excuse me, guys. Okay. So let's say, um, okay. So let's say you're already registered with a broker. Let me use the example of my broker. So let's say I'm open. This is my broker. And then let's say I want to open an account. No, I want to open a demo account. Okay, I come here to demo. The demo account. Where is this demo? Your transfer fund, blah blah blah. Oh, like 1 minute. Open a trading account, blah blah blah. No. Okay, I found it. Good. So now we come here to, so this is example of my bro. Okay, my internet. Am I back? Okay, excuse me. Okay, internet. I'm trying to. Um, okay, sorry guys. Trying to. Why am I find? Okay, okay. So this is what I wanted to show. So I just click on open a demo account here, and then you can see all the demo accounts available. So I can select any of these demo trading accounts. Okay, I can select any of them. Premium demo zero account is an account where we doesn't have zero spread. Okay, so I'll probably just um, take demo, I mean demo premium, and, select it, and then I now for most of your trading, your broker, you're gonna have two trading platforms, MT4 and MT5. I recommend you select MT4 because it's more user friendly. It's easier. I think it's um it's easier to use. It's older than MT5 in technology, but it's easier to use. So you select MT4. Now you can see, you can select your leverage. You see what I was talking to you about leverage. Leverage can be as low as 1 to 1. So for every $1, you get a $1 leverage. Okay, if you have one, for every $1 you get $100. So let me select that one, and I can select my balance and say 5,000. So if my balance is 5,000 for my demo account, and I have a leverage of 1 to means that I'll be able to take a trade that somebody with 500 dollars is going to be taking. That's the implication. Check my demo account. Okay, it's taking time to open the demo account. Okay, so now as far as the demo account is concerned, so these two are the information I would need to log in into my trading account. It can be on your phone and um on your phone and on your laptop. Okay, so I'm going to be showing us when we get to the Telegram platform. I'll be doing the video for us. I'll drop it there. Account wanted you to see how you can open a demo account on your if you are using alt forex broker. You can start learning how to what call tonight. Now I call it the most important one part of the day two because for especially for people who have been trading before, this is one thing that separates winners from losers. Winners from losers. Okay. Now, by the way, what you are seeing me using this website is TradingView. TradingView. TradingView is a forex tool. Is a website that gives you opportunity to analyze live charts, live trade, live charts. So this is a live chart as I'm talking to you. Okay, so you can see. So I use all of this data to analyze. Okay, I use all of this data. The lot of things you are seeing in this chart. Don't worry if you look, it's not complex. It's not complex at all. It's not complex at all. But I'm going to be, we will have a Zoom session where I will explain everything you're seeing here. Very simple. Okay. So there is this thing that makes people who win and people who separate people who win and people who lose. And that is how you see the market or what you see in the market. What you see in the market and the how you number one, like I said yesterday, you have to see what the institutional traders are saying. Institutional traders are the banks, are the hedge funds. Okay, they are the banks, they are the hedge funds. Okay, they are the guys who have billions of dollars in this market. And I tell you, they think and they look at things as investors. So you have to think, you have to ask yourself, what are they saying? Okay. Now, most of the time, these guys in trading, these guys, when they are trading, they are looking at the market. I mean, they are looking at their capital and they are thinking, what what do I stand to lose if I make this investment? What do I start to lose if I take this trade? So the first thing that investors think about when it comes to trading or investment is security of capital. Security of capital. Because they put money down to make more money. They don't put money down to lose it. So I want you to write that down in your note. The first thing as a trader, first thing you must think as you enter into the market, the first thing you must think, your first thought must be what? So that's the first thing. Please. So when they are thinking about security of the money, the kind of question they If I take this trade, what do I stand to lose? Please, I want you to start making your notes from this conversation we're having right now. I've told you this is more important than knowing how to trade. Understanding what the guys who make the big money in the market, what they think, understanding their psychology, their mind is very important. The forex market is mind games. So they are thinking, what do I stand to lose? So when they understand what they stand to lose, they are okay. If I stand to lose this, can I afford to lose this? Can I afford to lose it? Okay. Can I afford to lose what I stand to lose if I take this trade? So all of this thing I'm talking to you about is all about understanding the concept of risk. Okay. So they think about security of their capital. So that's the first thing they think about. So so what are some of the key things in the market that you will look at when you are thinking this way? Number one, you look at as in the overriding element of trade that you will focus on when you're thinking like this. You look at so don't forget we are first of all looking at the overriding thought of an investor in the market is security of, so they lose that much. So if the answer is no, I can't afford to lose it. Okay, then they don't joke with their risk. They don't joke with their stop loss. They don't joke with their entry levels. Okay. Now, in forex trading, the truth is this: there's always a right entry. Sell at a particular price, okay, and that entry you are made a bad one or a good one. Now, if it's going to affect stop loss, okay, it's going to affect your stop loss automatically if your entry is bad, because you will be forced to put your stop loss at a level where your that trade eat it eat you out on a loss. Now, if you now want to market eating you out on a loss. So in trading, don't be scared of loss. What you should be concerned about, the most important thing you should be concerned about is what what am I risking? What am I willing to lose? What's percentage risk I'm taking on every trade? So let's go with this.